Hi, how's everybody doing today? This is Rich here on behalf of Rich TV Live with our very special guest. It is Obie, and we are here speaking on behalf of Grown Rogue. How you doing today, Obie Strickler? How you doing today, Obie?
Doing very good, Rich. Nice to be on the show this morning. Appreciate you taking the time.
Oh, I'm so happy that you're here and you're joining us today. This is the first time that our community is getting a chance to speak to you directly and learn about your story.
Awesome.
And Rich TV Live has been doing and talking about cannabis stocks since the beginning of 2017. So a lot of us kind of call us like the OG of cannabis stocks because we have a real big community of cannabis enthusiasts that really love to learn about undervalued, underappreciated, underexposed companies. And we thought that your company really fits in that category. So why don't we get started first and foremost, Obie, and you can tell us a little bit about Grown Rogue International.
Yeah, so Grown Rogue International is we're a publicly traded company on the Canadian Securities Exchange. Our ticker is GRIN, so we like to say we're the company that makes you smile. Uh, we're very focused on cultivation in this space. We have assets in Oregon, California, and we're expanding into Michigan. And kind of the core focus of our company from day one has been on quality products and really managing costs extremely efficiently. Scaled agriculture has never been done in the cannabis sector. And so a lot of companies are figuring out the challenges that they may face as they try and go from, 10 plants to 1,000 to 10,000, an acre to 10 acres. And contrary to a lot of people's opinion that they believe, the flower sector will become a commodity, Grown Rogue's very focused on that piece. We're extremely proficient. We have a long history in the medical space on really navigating the different genetics and pieces that go into that. And flower continues to be the largest product component in every state. And what you're seeing is new products come into the market, but every product in each state is going to go through its own kind of micro conditions of where it goes on pricing and demand and things like that. And so while some companies, focus on say pre-rolls or vape cartridges or other things, Grown Rogue's very focused on the flower cultivation, high quality, low cost, as well as really establishing the brand and essentially the value that comes from the regional significance that we have in Southern Oregon. We're part of the Emerald Triangle, which is world renowned for the quality of its cannabis. And while we're, restricted today in our own states, right, we can't ship outside of our state yet in the U.S. We look forward to when, full deregulation occurs across the U.S. and we can ship our products, not only nationally, but globally.
Very good. And can you please tell us about Grown Rogue's management and what role each player plays to help strengthen the team?
Yeah, so we have a great management team. We like to say our team, extends all the way down to every person fills a critical role in making our company a success. Management team is, there's 4 or 5 of us. Myself, Obie Strickler, the CEO, the founder. I drive direction, kind of the expansion criteria of what the company's going to do, managing the capital markets and the different pieces of returning shareholder value. My background is in both medical cannabis, as well as I spent a big chunk of my career in natural resources. So a lot of time in oil and gas, a lot of time in the mining sector. So taking that diverse skill set between, the cannabis culture, right, which this industry was built on, as well as the regulatory environment, all the pieces you have to do to operate in a highly regulated space. Our public CFO is a gentleman named Mike Johnson. He's a CPA or CFA up in Canada. He handles all of our IFRS and filing requirements, as part of being a publicly listed Canadian Securities Exchange company. So he manages all kind of the public side. Our US-based CFO is a gentleman named Adam August. He controls all of our day-to-day financial controls, discipline, audits, running our accounting team. His background obviously is in finance. He has an MBA from University of Oregon. And he worked for a long time at Harry and David, which is a very large local $500 million a year public company that does distribution, mostly in the agricultural space across the U.S. and world.
Wow.
Rob Rigg is our chief marketing officer and also is kind of overseeing our Oregon sales department. Very good background on kind of the brand development marketing side. He worked at Nike, TaylorMade. He had his own shoe apparel company for quite some time, so he's got an entrepreneurial spirit as well. Rounding out our team is Jacques Habra. He's our chief strategy officer. Really was instrumental early on in the company's development on the brand and really kind of setting the thesis for how Grown Rogue interacted with our consumer base, and then shifted as we went public into managing the investor relations side of our business.
Very good. Now, can you elaborate on some of the key partnerships you have made in 2019?
Yeah, so 2019 was a very interesting year. It started off with a big bang, right? We went public late 2018, very excited. There was a big run up in the markets. And then we saw this huge compression the last 6 or 7 months. And so, contrary to a lot of companies that were very focused on growth at all costs and, revenue, buying market share, Grown Rogue realized very early that the key to success in the space was going to be good fundamentals and profitability. So our focus in 2019 has really been about how do we take the model we built in Oregon, which is the toughest market probably in cannabis anywhere. I mean, it's competitive, there was massive compression, and transporting that model into new states. And so the state we've been focusing on recently, which is actually really exciting because they just had their first recreational day yesterday, is Michigan. And so we've been, it's like a big deal. I mean, Michigan is a massive state. Like, it's got the second largest patient database in the U.S. behind California. It's number one per capita. And we've got some really, really exciting things in that state that we're working on. And we expect to announce soon that has really been the core focus of our 2019 strategy.
I love that. I love that you guys are in. Are you guys in Michigan, or you're going to open up in Michigan?
We will be opening up in Michigan in 2020.
Very good. That's huge because yesterday I broke the news that they did their first day of recreational sales in Michigan, and Illinois will be opening up January 1st. They will be the 11th state. So Michigan was the 10th state. Illinois will be the 11th state as of 6 a.m. January 1st. And we were trying to, with our community, determine which were the companies that were focused on Michigan. So I didn't know that you guys were going to be doing business in Michigan. So I think that's huge for you guys, because Michigan, from what I've heard, is one of the largest states in America right now to really be focused on cannabis. So it's going to be a big one.
It's going to be a really big state. Like I said, I mean, it's the second largest patient database per capita, first per capita, second largest on a volume percentage or perspective. And it's going to be a tremendously large market. Pricing there is fantastic. Barriers to entry are high. And so we're really excited about the partnerships and the opportunities we put in place inside of that state. It's taken some time because we're very thoughtful of how we expand and the people we want to do business with. You've seen a lot of, what you call the MSO model, which is acquiring or buying companies that really don't fit their long-term strategy. And it was more about, again, going back to we're purchasing for revenue. And as you're seeing in the market, as a lot of these proposed mergers have either been repriced or have dissolved, you got to stay focused on your core competencies and really, engage in the things that you're proficient and effective at.
I agree. You don't want to get too watered down. Now,
too watered down, too spread out. Exactly.
Yeah, and in speaking on that, are there any other future partnerships in the pipeline?
So right now, again, like going back to the core focus, from an expansion standpoint, it's really been Michigan. We're selective and looking at other opportunities, but over the next probably, call it most of 2020, that's where almost all of out of our current markets focus will be. That being said, one of the things that we're implementing in Oregon, as we continue to see an oversized demand for our product in this state with fantastic margins, is deploying our contract management model. So it's one of the things that I developed when we were in the medical space, where essentially Grown Rogue brings our expertise, our efficiencies, our team, our genetics with a known demand in the marketplace, and goes to other operators who may or may not have our efficiencies and provide services to them. And we're looking to bring that into the model in order to increase not only our revenues and profits, but also to increase the amount of supply that we control in this state. And so that'll be the other focus of 2020 for Grown Rogue is, building out our supply chain inside of the Oregon market.
Very good. And which markets are you currently in right now? You mentioned Oregon. Where else?
Yep, Oregon, we have an asset in California, which is licensed, but has kind of been sitting there. I wouldn't say in stasis, but California is a very challenging regulatory environment. You saw recent news in the last, call it 2 to 3 months, actually probably 2 to 3 weeks, of significant layoffs coming in that industry or in that state as they realize that the tax environment, the licensing environment has not resulted in enough legalized businesses coming into the space. And so companies with these big projections and, big beliefs of what they're going to do have really struggled to meet what they're going to actually accomplish. And so you're seeing a little bit of what seems to be almost not a consolidation, but a contraction inside of the California market. And so we're kind of watching that, waiting to see if that's a state we want to get into, or maybe we look to divest that asset. But we like having another one, right across the border. I mean, our headquarters is 20 minutes from the California border, and a presence in California at some point I think is going to be really critical. It's going to be the largest cannabis market in the world once they kind of get through some of their regulatory snafus that they're going.
I think that that's part of being part of a new disruptive industry, an industry that's going from being illegal since inception to being legal. There's going to be some red tape. There's going to be a lot of government intervention. And, that's what makes this such a disruptive industry and why I believe this is going to be an industry that will only grow over time. Despite the fact that 2019 has had a lot of, let's say, ups and downs, more downs than ups for the sector. I believe now we've had 8 months in a row of red, believe it or not. It's been crazy. So 8 months in a row of red after 3 very strong months to begin the year. And I'm assuming December will probably be red again because of tax loss selling season. A lot of people probably just be selling all their, their losses. And then we'll probably see a huge run up in January. So that's kind of what we've seen in the past. And most likely that's what's going to happen again. Now, early in October, you announced Grown Rogue achieves record-breaking gross margin in third quarter 2019. Can you please tell us a bit about that and what this means for Grown Rogue International Inc.?
Yeah, so I mean, kind of alluded to this earlier, is that, Grown Rogue from day one, while we got a little bit caught up in kind of the revenue, the growth model, like I think every company in the sector did, it all comes back to your fundamentals as not only an industry, but as a company within the sector. And, coming in the first of 2019, we started to see the shift maybe a little bit earlier than some companies. And so we stopped with this, again, what I call the growth at all cost model, and really started saying, what are our core competencies? What products have the best margins that we can actually deliver to actually increase profitability inside of the organization? That's really when we almost eliminated our distribution business. It was a big revenue driver for Grown Rogue, but made very little or no money. Sometimes it was just a loss leader. And why do that? Like, it makes sense. Like, you can promote how many dispensaries you're in, how much your top line revenue growth. But if that's not resulting in any profits, and you can no longer rely upon investors, I mean, the people who are on the show, to fund a growth or a business plan, that's never going to have any profitability. And so what that really was, a culmination of Grown Rogue's focus on optimizing our core products, really focusing on decreasing costs. And so, we've seen a couple things come out of Canada recently where some of the big producers have been touting kind of their cost per gram. And while, ours fluctuates on a monthly basis based upon yields, I can say very strongly that we're one of the most cost efficient producers in the space. That's the US, that's Canada. And that's what drives your gross margin, right? And so our products now are looking at 65, 70% gross margin, which is fantastic in this space for Grown Rogue at this stage of our company's development.
What would you say is your average cost per gram? Do you have that?
It depends upon production method. Our outdoor production, because we live in one of the the most pristine environments in the world for high quality sun grown flower production. We're down at probably 30 cents a gram.
Wow.
Which is extremely efficient, and our product rivals most indoor that's produced across the country. Again, I'll go back to, like, there's going to be another monumental shift in value potential once we're able to ship our products out of state. And I think a lot of people are missing that, which is, you look at like Napa Valley for wine, you look at these like regional areas that have regional brand just recognition. And Southern Oregon, Northern California are going to have that in spades once cannabis can actually move outside of these borders. The indoor flower costs were down at probably like 75 cents a gram for our production, which, kind of the gold standard historically has been around like $1.20. So much better than that in terms of our production costs. And, we're one of the more, I think, stabilized pricing states in the US, probably with Washington and Colorado. And, you think about taking our, call it $400 a pound production cost into Michigan, where prices for flower are selling at $3,500 to $4,000 at the wholesale level. And you think about that margin we're going to capture, as that state slowly starts to mature. It's a really exciting opportunity.
That's great. Now, can you please tell us Grown Rogue's share structure and how much is held by insiders?
Yeah, good question. So we have a pretty tightly held float inside of the company. I think we have about 75 million shares outstanding. We got some warrants, that would maybe take us up to 100 million if they're fully, exercised. Of that, about 65-70% is controlled by either very friendly, like early private investors or insiders of the company. So we only have maybe 25 or 30 million shares that are actually in the public float right now. So it's a pretty tightly held organization. And most of these shareholders are very patient. They didn't get into this for a quick flip. They want to see the long-term benefits of what Grown Rogue's bringing to the sector before they start to look at, monetizing that investment.
Great. And who are Grown Rogue's main competitors, and how do you stand out from the pack?
That's a really good question. I mean, it's one of the things we ask all the time, like internally, like who are our competitors in the space? People start talking about, does Grown Rogue look at the competitors on the flower markets in Oregon, of which we have very few, to be honest. Like really what you see in Oregon is either fairly small scale cultivation or really boutique. And what Grown Rogues really position themselves, at least from a competitive landscape in Oregon, is being a high volume, well-priced flower producer. And what that means is, essentially we're able to offer kind of extra high quality product, maybe not at the top shelf like boutique level, but the top shelf boutique level gets very little volume, very little velocity. And, we produce, a couple hundred pounds a month out of our indoor production. We do 2,000 to 3,000 pounds a year just in our current outdoor production. And so for the Oregon market, we're very limited in terms of competitors in our product line. I would think from an overall organizational competition, C21 is similar to us. They've got assets in Nevada. They have some stuff in Oregon. They did a little bit more of an aggressive M&A plan than Grown Rogue did. Grown Rogue built all this kind of up organically. I mean, I still run the company and we started it. We weren't like a Canadian kind of group of financiers who came in and purchased an Oregon company. We built this, started it, continued to run it. As you look nationally, kind of across the sector, again, it's really hard based upon size, focus, who's on flower, who's on brands. I think what you're really seeing in this market is a separation like we saw in the mining industry, right? Which is you had really kind of three main tiers. You had kind of the entrepreneur, call it the exploration folks. They're the people, the individuals, potential partnerships we have in Michigan who went through the heavy lifting of finding a building, working through the local regulatory, getting a license, and kind of getting the base going, sort of like the early, wildcatters, whatever you want to call them, who find a gold deposit. And then they realize, well, what do we do next? And then you got to go through all how do we scale it? How do we build it? How do we get this thing up and actually operational and into a position where, maybe it's ready for an acquisition by in the mining industry was a major. You only had maybe a dozen kind of big mining companies operating most of the assets. So I think where Grown Rogue really fits is we're not going to be a MedMen, we're not going to be an Acreage, we're not going to be like a GTI. Those companies will ultimately be kind of the big operators like Curaleaf, Trueleaf across the US. I think we're more in that middle spectrum of we're really good at operationalizing assets and getting them up, getting them efficient, getting the SOPs in place. And I don't know if there's too many other companies in our space who are thinking about it like that. So again, going back to your competition question, it's really hard to put an analysis on that because of those reasons I just said, and the fact that the industry is so new. There's tons of competitors, people coming in and out of the time, and where is the industry going to settle out is the ultimate question.
Very good. And if there's one thing you want shareholders to know about Grown Rogue International Inc., what would it be?
Today is the time to be buying. I mean, it really is. Like, you look at the sector, you look at how much compression's happened across the industry. Grown Rogue is a fantastic buy today. We've got great core competencies. We're in good markets. And to put it in perspective, I think we're trading around like just over a 1x last year revenue, right? Like, our fiscal year just ended and we'll be, you could look at our up through third quarter, we'll be somewhere in the $4 million range US. And we're, technically trading about a 1x revenue. And you look at what our revenue is going to be in 2020 as we continue our expansion in Oregon, move into Michigan, and there's just no reasonable process to think companies with our growth potential and what we're doing, especially from a margin and profitability side, are being valued properly in today's environment. So it's a good buy today. I'd suggest getting some Grown Rogue stock and looking at what it does over the next 6 to 12 months.
Do you have any guidance on what the revenue is going to look like in 2020? Like, you mentioned 4 million. Like, do you have an idea, an estimate of where you think you guys could be? I don't want to put you guys on the spot. I don't want to put. We don't want guidance. People putting out guidance and they don't meet those numbers. That's not what we're saying. Just like an estimate to give us like an idea of how much you think maybe like growth wise the revenue can grow. Could it?
I can easily see us doubling in 2020.
Great.
Based upon not only the efficiencies we're creating in Oregon, but also, if we finalize and actually move into the Michigan market, which is looking more and more promising every day, it's going to create a massive increase in not only revenue, but profitability for the company.
Very good. Now, with the way things are going, it's looking like Grown Rogue International is primed for a huge 2020. Can you tell us some of the milestones coming up for 2020?
Yeah, the biggest milestones will be we should be EBITDA positive in Q1, right? Which our fiscal year ends in October, so November, December, January will be Q1. Definitely into Q2, right? Our business model is extremely efficient now inside of the Oregon market. The other big milestone in development is look for an announcement on our official entry into the Michigan market. And so that'll be the other big thing we do. And then, continue to follow us as we track towards our contract management model. Kind of those three things, EBITDA positive, Michigan expansion, and contract management cultivation inside of Oregon. Those are the three big things we look to accomplish and achieve in 2020.
And if somebody wanted to get in touch with the company, whether it's a investor, someone that wants to buy products, whether it's a merger and acquisition target, anyone that wants to get in contact with you, what's the best way for them to get in contact with the company?
Yeah, best way is go to our website. We've got a pop-up form that you can sign up to. It's an invest@gr, or wherever the email that sends it to. You get like a very short pitch deck on the company and gives you access to the management team. So sign up there, and if you have specific questions, ask them, and then one of the team will be back to you based on whether it's a sales inquiry, an investment inquiry, or a potential partnership inquiry.
Very good. Do you mind if I ask a couple questions from the audience?
Absolutely.
Okay, great. So we're just going to open up to the audience. If you guys have any questions about Grown Rogue, we are here live with Obie Strickler. One of the questions is, are you welcome to put together footage of the Michigan grand opening or any other location?
Are we welcome to put that together, or are we going to?
I guess, are you planning on putting together any footage of any of your locations that investors can kind of, like, our community likes to see, for example, like Aurora Cannabis just launched a store in West Edmonton Mall, and we had some members that actually went into the store and made videos, and then I posted them on the channel so people could actually see the inside of the store. Is that something you guys are planning on doing?
So we definitely will be taking some video of Michigan as we continue that kind of expansion and showcasing what we're doing there. I'd highly encourage anyone who's interested in looking at kind of the Oregon component of our operation to go onto our website and watch the newest video we put in, which is our 2019 sun-grown harvest. Great drone shot, shows the scale and like the whole process. Very, very good video that kind of shows that component of what we're doing.
Okay, great. And another question is from Kyle That was from Reefer L Joint. Thank you, Reefer L Joint. Another question is from Kyle. He's asking, have you noticed a big difference between East and Coast markets at all? Like
East and West Coast markets is probably what you're asking.
yes.
The answer to that is 100%. So what you have on the West Coast is you have the future of the industry. I mean, this is Oregon, California. The West Coast is synonymous with cannabis, innovation, quality. One of the big things we really like about taking our model and our understanding of consumer preferences eastward. And it's kind of funny, and it's a really good question, is that, you know, you look at the big multi-state operators from the East Coast, they're all coming westward trying to buy companies, whether it's in Nevada, whether it's in California, whether it's in Oregon. And the Oregon, California, the West Coast companies are taking their brands, taking their product innovation, taking their genetics eastward into these new markets that are, as I like to say, years behind where we're at today. And so there's a massive difference between what you find on the West Coast in terms of quality, innovation, product types, and what we see on the, you know, the Midwest and the Eastern Seaboard.
What do you think about the MORE Act? You think that it just passed the vote at the House level, 24-10, a couple of weeks ago. You think that there's a chance that could pass the Senate?
I mean, if I could predict, you know, the political environment of the U.S., you know, I'd probably be doing something different with my career. But it's a matter of when, not if, at this stage.
Great.
And, you know, it's coming. And I think this is, again, where you look at companies on the West Coast, you look at companies like Grown Rogue, who have a significant component of their portfolio is sun-grown products. When that wall falls, I mean, people across the U.S., if not the world, are going to be looking for, you know, called the Napa Valley cabs, which is going to be the Southern Oregon OG or whatever that genetic is. Like, people will pay premium dollars for our products coming out of this state. And so deregulation, in my opinion, is the next big value curve that you're going to see at kind of a macro industry level. What you're seeing is a bunch of micro components inside of each state. They go through these curves of value creation, compression, and then recovery. Oregon's compressed all that into a very short time period. So we're very familiar with what I believe is the ultimate curve you'll see across states as well as products, because we've watched it in Oregon. And when national deregulation occurs, you're going to see another massive increase in value. And when does that happen? You know, I don't think it's going to happen in the next 6 months or 12 months. But I think it's going to happen before 5 years. And that's kind of the time frame of when we think internally that we'll see, you know, the ability to ship our products and have full deregulation across the U.S.
What about internationally? Would you guys ever consider doing business outside of America, or are you just focused strictly on America? Is that 100% your goal?
We looked at, you know, strategic relationships with Canadian LPs who have export potential. Working with one group right now that, you know, we have a very unique, and it's patented, a nitrogen sealed pre-roll technology. So we're the only company in the world, I guess. Well, it's not like a, you know, a global patent, but at least in North America, that can utilize the nitrogen sealed tech. And, you know, we got one company who actually has, you know, assets overseas that's looking to either license or bring that technology to their system there. And so we'll look at global expansion, but right now, the U.S. market, I think, is big enough to really satisfy what Grown Rogue's goals are. And quite frankly, you know, Oregon, California, Michigan, even the states that we're going to have operations in, is big enough to satisfy that, at least in the short term. But, you know, as the industry matures and as there's a demand for our products, you know, shipping those to where the demand is absolutely in Grown Rogue's kind of strategic objectives.
Now, a lot of our members are very tech savvy. Okay. So Reefer L Joint is one of our members, and what he loves to do is he loves to go onto websites, sign up for their newsletter and their mailing list and their news. And then what he does, and I do this too, and he does a quite a good job of it, is he'll take that news and he shares it on Twitter. That brings tons of real exposure and real investors and eyeballs to the company. He's asking if you can become more Twitter friendly.
Okay, more Twitter friendly. That's really good information or feedback to pass along to my marketing team. There's a lot of restrictions in cannabis about what we can and cannot do with social media. And so we have a pretty large Instagram presence. We do a little bit on Facebook, but Facebook is very restrictive. And so Twitter, I'll pass that along to actually Rob Rigg, who I mentioned earlier, to see if we can start putting out some more tweets to drive some interest there. So good feedback.
Yeah, like I think what he means is like for a lot of companies, you can go and sign up to a newsletter. And then every time the company has news, we literally get that newsletter sent right as a press release right into our inbox.
Okay.
And then, and this is what a lot of the LPs do and MSOs. And then you can like literally take that and just share it on Twitter very easily. Just sharing the news. You're just copy and pasting it essentially. So it makes it very easy for shareholders to get the news out there, to like send it out there and just circulate it. And it just gets more eyeballs. And I think because your company is still relatively new and unheard of yet, and because you guys are trading at 1x essentially, there's so much opportunity here.
Yeah.
And what we love to do as a community is find these companies that are undervalued, underappreciated, underexposed, and really put it out there to the masses. Because this could be an opportunity where if you guys can grow from, I think you guys are at 12 cents in Canada, if we can grow this to at least $1, you're making like 8 times your money.
I know. And that's why I said buying it now is a good time.
Absolutely. So this is the type of companies that we love to get involved with, that we love to talk about, and we love to position ourselves before they explode. Now, one of the companies that's been hugely successful in America, I've been telling everyone that their number one right now is TrueLeave, because they've got the highest adjusted operating income in the entire sector. I like what you're doing because you kind of remind me of what they're doing. They're not interested in becoming vertically integrated. They're not interested in being everything for everybody. They're interested in selling flour, being profitable, and staying focused.
Yep.
Is that kind of one of the examples that you're trying to model yourselves after? Very simple business model, a profitable business model, and really scaling as opposed to trying to be everything for everyone, which has essentially diluted a lot of these companies because they've gotten too many shares out there. Like Aurora Cannabis, for example, has put out way too many shares out there trying to grow internationally and be a first mover. And it's really hindered them because they got 1.1 million shares out there. And now everybody's saying that they're too focused on being vertically integrated.
Yep.
TrueLeave is on the other side, focused on just growing and selling flour, being profitable, keeping their costs down, and keeping the profitability up. Is that a good example of where you guys want to be in the future?
A great example. I mean, it's very much about, I've had numerous discussions over the last, call it 6 months about, hey, what about this state? What about this? And our response has been consistently, if it makes a ton of sense from a business perspective, sure. But it's about focus on the core competencies today. I think TrueLeave, while much bigger than Grown Rogue, is a great example of a company that's been doing it right from day one. And I think, that's exactly how Grown Rogue was trying to build the business today. And, to go from 12 cents to, I don't know where they're trading at today, but there's a lot of potential value that can be created for the shareholders that get involved in the company today.
That's great. Well, thank you so much for your time today, Obie. I wish you all the best of luck. Let's try to make this a consistent thing where you can come on our show. We can go live and we can talk about anything that's happening, any news. And I know that our entire community will be watching and will be following your story as it evolves. So congratulations on all of your success so far. I look forward to seeing the next Q where we're talking about potentially being on the right side of having a positive EBITDA. So congratulations, hopefully, on that. So everybody that's at home, please stay tuned. If you guys haven't smashed the like button, please smash the like button, comment down below, and share the video everywhere. This is Rich from Rich TV Live with our very special guest, Obie Strickler, the CEO of Grown Rogue International. Have yourself a great day, Obie, and we'll talk to you soon.
Thanks, Rich. Appreciate it.
Have a nice day. Thank you for watching, everybody. We'll talk to you guys soon, and have yourselves a great day.